Hey, what's up guys, Accountant Vision here. In this video we're going to learn how to prepare a marginal cost statement by understanding what marginal costing is and the 3 steps. So what is marginal cost? It is the cost of producing one extra unit. So let's say we manufacture phones, and to make a phone we're going to have materials, and we're going to need labor. And let's say for materials it's going to cost us £5, and for labor the hourly rate will be £5 per hour, and on average it takes us 2 hours to make a phone. So to get the full cost of labor we're going to times this by 2, which will become £10. And to get the marginal cost we're going to have to add these two numbers together, which will become £15. And that £15 is a marginal cost, which is the cost of producing one extra unit. So if we want to make 2 phones we're going to have to do 15 times 2, which will give us a marginal cost of £30. And by understanding all that we can then calculate the contribution. So now we can move on to the 3 steps. So step 1 is to calculate the marginal cost, step 2 is to calculate the inventory units, and step 3 is to calculate the inventory and production values. Okay, so let's look at an example. Let's say a phone manufacturer starts making new phones, and their fixed overheads per month will be £10,000. Their budgeted activity level is 5,000 units. They're willing to sell the phone for £30. They have direct materials and labour with these costs. The sales and production units for 2020 are as follows, and there will be no opening inventory at the start of January. And the question asked us to prepare the marginal costing statement. And to prepare the marginal cost statement, we're going to use the 3 steps. To start this off, we're going to calculate marginal cost, and the marginal costs are basically the variable costs here, which is the direct materials and labor. So let's write that down. Direct materials, direct labor, £5 and £10. Have a money sign here, and then add that up together, and that's going to give us £15. And that £15 is basically the marginal cost which we have calculated. Step 2 is to calculate the inventory units, and these units are basically these figures here. So we're going to write a column for January and a column for February, a column for the inventory, so opening stock, productions, closing stock, and the cost of sales. For opening stock of January, they told us there is none. If they've given you the figures for the opening inventory, then write that down. In this case there's none, so we're going to write 0. For production, they told us it's 2,500, and for cost of sales it's 2,000. And to get to 2,000, we're going to do 2,500 plus 0 minus something will give us this, and in this case it's going to be 500 units. And that 500 units will then go to the opening stock of February, so we're going to write 500 units here. For production, they've given us 4,000 units, and for the cost of sales it's 3,000, so we're going to write 3,000 there. And to get to 3,000 we're going to do 4,500 minus something will give us 3,000, and that missing figure here is 1,500, and that's the units to calculate for the inventory. And now step 3, I basically done this like this for you guys just to save time. All I basically done was using step 1 times the step 2. So for example, £15 times the 2,500 units, which will give me £37,500, and I did the same for the rest. And once you've done that, you can then prepare the marginal cost statement, starting with sales. To get the sales figure, we're going to need the selling price and the units. So the selling price will be £30, and the units will be these figures here. So we're going to do the workings. So for January, we're going to do £30 times the 2,000 units, which will give us £60,000, which is the sales. So let's write that down here. £60,000. For February, we're going to do £30 times the 3,000 units, which will give us £90,000 of sales, and let's also write that down here as well. Next, we're going to do the inventory flows. These figures here are from step 3. Basically transferred these figures to the marginal cost statement just to save you guys some time, and that's basically what you need to do, this part here. And then to get the contribution, we're going to have to do the sales minus cost of sales, which will give us for January £23,000. and for February £45,000. And then once you've done that, we can then look at the fixed costs. In this case, the question has already given us fixed overheads per month will be £10,000 for January and February. So let's also write that down here, £10,000 for January and £10,000 for February. And you can see that both contribution for January and February are enough to cover the fixed costs to give us the profit. So for January, it's going to be £13,000. And for February it's going to be £35,000. So you can see that by applying the 3 steps we are able to prepare the marginal cost statement, which I've just shown you right now. And if you found this video useful, give it a like and do also subscribe for more videos like this every week. Thank you for watching.